Housing in Singapore, about 1.5 million units, mostly HDB. The private market takes only about 26% or so, and even more scarce would be landed homes at only 5%. This 5% translates into about 73,000 housing units. You can't really increase landed supply. Where is the land to build new landed? You just take one big landed property and you chop it up into small landed properties. That's the only way the stock increases. And that manner of increase is very limited, really. So for all intents and purposes, this 70-something thousand number of landed units is quite fixed as long as Singapore stays at 720 square kilometers. Then at the start of this year, we called price growth for the whole year 2023 at 5 to 7%. There's no choice. There will be price growth this year regardless, because as long as new projects are launched, and remember, developers playing catch up, right? They have to catch up with the year that they missed, 2020, because all went into lockdown. Right? So if they buy land, especially government land sales sites, at $1,000 per plot ratio, they have to sell it above $2,000 per square foot on launch units. There is no choice. They have to factor in the increased construction costs as well as accord some kind of decent profits for themselves, right? In light of the big risk that they are taking. So because of the latest round of measures, 5 to 7% has now been adjusted downwards to 3 to 5% for the whole of 2022, much more conservative than the 8.6% price growth last year, because we are still in an undersupplied situation. Last year, rents grew 30%. Wow, rents in Singapore just flatline most of the time. Even good times, bad times, it just stays kind of flat. Wow, so 30% really tells that how undersupplied we are, and supply is really desperately trying to catch up with demand. So this year, not as fierce as last year, because of that 70,000 units going to be completed, but it will take some time. So call it about half, slightly under 15% rental growth for this year. Still kind of a landlord's market for most of this year before most of the supply comes onto the block. Of course, the biggest risk in our faces is inflation and interest rates.